these names are going to go like regardless of what's happening in the market. So I wouldn't worry too much about that. But if you're looking and seeing like, okay, what's happened with the general market, we've got a gap down here of 1.5%. So what that's going to also do is probably like it's going to increase the volatility. So what you're seeing today, like with TVIX, right? You can see TVIX up 21% today. It's finally going. This thing's been a downtrend forever. I would expect probably a 2-day bounce on this thing, before it starts to roll back over. You're seeing this, 21%. It's in play today. Volatility is increasing quite a bit, and we've got to respect that. We have had just like a very, very easy. I've seen a lot of bull markets, over the years, and in bull markets, like everybody looks like a genius because like you could just buy stock, then you add a little bit more, you hold it overnight, and all of a sudden you're just up a bunch of money, and you can be really loose and fast with your rules. You'll be in the hole, and you'll dig yourself out of the hole. And it has nothing to do with skills on that because that's just bull market trading. Like in bull market trading, anytime you're in a hole during intraday, you can basically get yourself out. Never seen anybody not be able to do it. It's just you can always get yourself out if you're willing to take the heat. Now what happens is when the volatility gets higher, things get a little bit more tricky because you have to be more precise because your holes that you dig yourself in can get really big if you oversize because the volatility is increasing. So in the morning today, what we've got to do is let the market shape up a little bit. There's going to be either two options here. The gap will start to fill a little bit probably at some point, but it doesn't necessarily have to. Like usually when you have a 1.5% gap down, like it'll start to fill a little bit because in general, like we're so extended on the NASDAQ. Like if you see here, like we're so extended that, if we're really going to pull back, we haven't even really started. Even your 9 EMA is still at 240, so you've got room to fall even on your 9 EMA. So we may pop a little bit and then, we may have to refade this market. Or, the market does still go gangbusters every day. So, we may even have to go and try to long this thing red to green. I think you got to be prepared to go both ways on today's market. It's going to be really tricky. It's going to be tricky but fun. We've been a little bit bored lately because it's been kind of right, like you're just cruising up every day. Now we have ourselves a little bit of a different atmosphere with the volatility increasing. So if the market does bounce, what we'll do, we've got RCL on some big support here. If the market bounces, this thing was 75, it's going to open at, it's going to open, hold on here, fucking TC1000, hold on. Yeah. This thing is going to open pretty low, 55, down 8 points. I think this is like a potential bounce spot. I don't know why this thing's not doing that. NCLH is like another one that just come down like really like a far way here. We may get like a little bounce here too off the 20 SMA. This thing's down 20% today. If we need to fill, these are the ones that we'll do. Now, what we can't discount is because the tricky part of today is going to be because the NASDAQ is only just starting its pop down. Because the NASDAQ is only just starting its pop down. We could have some sell pressure in the general market. So we may get a pop in these things at the open and then they may refade. They may refade. So the play on this that you're going to have to watch for is something more like this, where, like a couple days ago, like when they were starting to gap down, what you saw was like they gapped down. It's like this thing got to 24 and it popped up real quick to, the 25s and then it re-rolled. That is something we may have to be prepared for. If we get this gap down, if we really squeeze, we may re-roll. Now it's down 20% today. Like it's really hard to chase that thing into the hole. So I'm thinking more bounce on these. So like bounce on these, but like fade on tech, right? Because tech is just starting its pullback. And then add TVIX to the watch list here. You know, this is it's just starting to break over its MAs. Like this one may have a chance to keep going. I think that that's going to be, man, that's going to be a little bit hot. Now, when the market's getting throttled, ZM tends to work out really well. So we've got a breakout spot on ZM that's starting to set up here. Anything over this level, I think, is going to be pretty good. It had a nice day yesterday. If you saw here, like, if you look at like the intraday price action of it yesterday, you got like a really sick range on this bad boy. This thing is pretty hot. This thing is pretty hot. Docu's like another one. Like, I think at some point, like if the market holds up, like this one's going to break its flag over here. We'll watch and see, you know, this one on the bounce. We need to put this TQQ on the watch list today. This may be just like an easy trader for us back and forth. When the market gets volatile, you can go into just like a straight 3x ETF and trade it back and forth, so you don't have to necessarily mess around with like individual stocks. You know, this thing can give you essentially what you need in terms of its range. So like add that to the watch list. I think you'll be good to go. Another one, I think we start to watch for a potential bounce. I'm looking for one more flush on this pen. So pen is now down $12, 40 to 28. I think one more push down, and frankly, like we'll have some really nice reward to risk on pen. You can see here you're down 1, 2, 3, 4. This will be day 5. There's two aspects of this. If the market bounces, then we're gonna, and it holds this 20 SMA here. We'll try to long it here. But if the market doesn't bounce, then, you know, we'll let this thing pull back into more of this range, and then we'll get ourselves like a really nice reward to risk on this. Once a momentum stock gets oversold and has its first deep pullback, so this is a momentum stock, right? When you have your first deep pullback, those do tend to get bounced. They do tend to hold. I think that this one's probably going to give us a nice opportunity. You know, you can go in really with like any of the cruise lines or pen. Any of those will be like bouncy if the market starts to wheel back. You can put all these on the same list, right? You got CCL too. Probably one more flush back down into this support, and you get yourself a nice kind of good reward to risk. The SSR will be on these things, meaning short sale restriction. So if the market does bounce, they will catch a squeeze because you can't short it on the bid. So then what starts to happen is these things start to really just go bonkers. You know, same thing. Like, see, like this save. Man, what a squeeze. So this was basically just must have been a short squeeze. It went from 7 to 25. Now you just completely rolled over on this thing. You're down 20% today. You're right back into this support zone. If the market starts to bounce, like this will be also a top. So you got save, CCL, NCLH, RCLH. If the market rebounds, these will be potential bounce spots. Now on the other side of things, if these things squeeze hard at the open because they're at the supports and the market keeps flooding down, then we'll short them into the pops and, you know, just fizzle them out. Does that make sense? Good. I know a lot of you guys are asking about this WAFU. I have no plans on trading any WAFU education group, but in this market, so this is like the third day basically, we have seen, third day in a row, we've seen like in pre-market like a 400-500% gainer, and they've been keep going up. You know, we saw that with this IMRN. You know, it had 1,000% move, you know, for intraday trading, which is fine and is actually fairly clean, you know, minus the end. But the morning and afternoon were actually clean on it, so it was tradable. But like these things always tend to go back down. They're turds. I have no interest in trading these because you know, they just come all the way back down. But you can't discount the fact that the market is kind of giving us a lot of these. You know, maybe this thing is in play and it's going to be able to kind of keep going. NK's got some news out too. So you can see this thing's popped from 5 to 85. The daily chart on this is much nicer. This is probably not a pump and dump stock. Like this is probably a regular company. As you can see, like it has big days, but then it kind of consolidates normally. So you got like a trend line break that's setting up here. On this stock, like if it starts to hang out under 850 in the morning, and you start to really base out, and it takes out that 850, I think you're going to actually have, you're going to probably have some upside in this if it can break out. Now, mRNA is only up like 4% so far, but you do have like a rounding pattern here. So after like, you got hit with kind of this sell the news event, you pull back to your 50 SMA and you bounce now. You bounce into MAs. It's just been trading like crap for the last few days because it's been stuck under its MAs and it's just sitting there. It's just sitting there compressing. And when you're compressing like that, and you're compressing and you're compressing and you're compressing, what'll happen is at some point you'll round out, and when your moving averages start to curl up, you'll build out a range, and when you take it out, you can start your way back, into what was the former trend. This is just a consolidation essentially. All stocks, when they get extended, like you see the move from 18 to 90, all stocks at some point when you make that kind of move, you have to spend like a good month pulling back and going sideways, and you just have to do that. That's the nature of, how cycles in a stock work. Now that you're breaking out, and, if you can sit there, if you look at like an hourly chart, for example, I always look like whenever you're doing your homework, say you got a stock on your list, look at that stock on different time frames. Look at that stock on different time frames. So you got your daily chart. Look at it on an hourly chart or 30-minute chart, to try to figure out like where the sweet spots are, so that when you're day trading, you're able to like take your patterns, but you're taking those patterns in spots that are important. So like a pattern in itself, like an ORB pattern, a quick pullback pattern, so on and so forth, none of that means anything on its own. None of that means anything on its own. But what it does mean, over time is that if you start to take a pattern and you're in a release point, like a point where there's no level of resistance overhead, then that's when the pattern becomes more meaningful and you're able to get a nice shred. So if you just take a pattern in itself, but it doesn't have any levels that you can trade around, you end up really getting smoked out. So you just got to always be like super mindful of, where you are in terms of the location of the trades that you're taking. I think if we can kind of start making a move around this way, then we're going to be good to go. Good. Okay, so we got mRNA. There's some other stocks that are moving around. This SRNE is gonna push it around, but this is already fading off pre-market, so I wouldn't really worry about that one too much. A lot of people have been asked about BYD. It needs a hold right here. If it doesn't, it's probably gonna fall back into the range, especially with it's almost like a failed breakout at this point if it starts to come back in here. So we've got to be a little bit careful on this one. If the market does hold up, this is like a good stock that bounces actually pretty easily. I think that it's still a leading stock as long as it can hold this level. If it can't, then it's probably going to come back into this. And we can't discount the fact that the market is just so extended, and we can't help the fact that the market's so extended, and you got people running around all over the place, just hooting and hollering and kissing and hugging. Like down here in Florida, when you go to the beach, people are grabbing butts, they're grabbing dicks, they're hanging out, they're making out, they're sharing booze out of each other's sippy cups. Man, there's things going on. We're probably not hearing the end of this virus. Like it's make out party out there. So we'll probably start to hear some stories, about virus coming back too. I mean, it looks like people are out and about. Like, I live in a townhouse here, and I share it with like 4 other people. We have our own like private beach over here, and the people next door, but they pack, no joke, like we got 4-bedroom townhouse. They packed 25 people in this thing the other day. I cruise in and I'm like, hey guys, what's up? And you just see like just person after person just rolling in. And it's like, oh man, that doesn't seem like you guys are distancing much, are you? There was a makeout party over there. So just something to kind of be mindful of when you're, looking at this stuff is just we're not hearing the end of this. We're not going to hear the end of this. So moral of the story, cruise lines bounce. Airlines bounce, possible. All right. Now, if they pop, we will look for, a refade. ZM for a potential long. ZM for a potential long. DOCU for a potential long. MRNA for a potential long. Short list. Then you add in TQQ. We could trade this thing back and forth depending on how the market's going to ebb and flow. I do think ideally if it pulled back to the 90 spot, we'd get a little bit better of a bounce. And then we add this TVIX. If the market's going to get smoked out, and you can't chase TVIX ever up high. So if TVIX starts to pull back, say it fills like half the gap, it's up 22%. Say it fills up like half the gap, and then it starts to like base out. You hit like the 9 EMA or 20 EMA, and you start to base out. Then we'll start to watch and see if that volatility holds and it starts to run back. Casinos, cruise lines is the same thing. Every cruise line's got a casino inside it. They're not nice ones, but it's the same stuff. Yeah, they run the same, so I wouldn't worry too much about it. They're all looking like the same charts. Anything that's like a highly leveraged play on the economy is falling down right now the last few days, even before the market did. Cruise lines, casinos, they're highly leveraged plays, meaning when the market does good, they move a lot to the upside. And when the market does bad, they get smoked to the downside even more than you would think, right? They move in exaggerated moves due to the leverage in them. Noah, how you doing? So this W is also something I think that somebody's just asked about this W. This W is also something that I think you could add to the watch list. Whether it goes up or down right now is, we'll have to see. It's just stuck in a box. So when you're just, hey KP, how are you, brother? When you're stuck in a box like this, it'll just trade like haphazardly till that range breaks one way or another. So when you're inside the box, you can trade it back and forth, but that's much more tough. Like it's much easier to let a release point happen, and then you're able to trade it up and down. Otherwise, it's all just the same stuff. Good. So that's the list. I'm sticking to it. We don't need to get too crazy today. I would be careful on just overnighting stuff for the next couple days. The market ideally needs to pull back to this 20 SMA at least. So it's that seems to be like a nice bounce point in the market the last like month or so. So I think that's probably, let me go to like a cleaner chart here. So you can see here the last month or so, it seems that 20 SMA is like really where the market gets its footing of late. This is the longest I've ever seen us ride without a test, at least to the 50 when you're this extended. So like, ideally, man, like 2-3 days of getting smoked out here, like it would be painful, it'd be painful if you're long a bunch of stuff. But if you get like 2-3 days of just getting smoked out like that, man, like you'll be getting a lot better entries on your trades, and then you're going to be able to shred. So that's the list. I'm sticking to it. I would probably, no oil stocks for me. Yeah, no oil stocks for me. I think I just go with the basic regular stocks today. Oil stocks are tough to trade. So this is the list. I'm sticking to it. Let's go have some fun. Man, how hot? This week has been hot in the chat room. It has been red hot. I think, dudes, we're going to have ourselves another hot day here. This has been the hottest year around for trading, but the last week has been like, the last week has been pretty easy. And markets are never easy, but like the last week has been kind of easy. LK's going probably bankrupt. You know, that's just a trading vehicle. I wouldn't say bankrupt, but, you know, these kind of plays are all getting diced. LK, HTZ, you know, like, see this? Like, these are all essentially, you know, they squeeze and now they're all getting diced. Man, I was trying to short this thing around 6 and they pulled the borrow on this thing. I had the borrow and then they pulled the borrow. Right when I'm like, I'm putting in the order and it's like, borrow's gone. So annoying. Hey, Alex, paying for the third divorce. Now that's nice. Hey, every man deserves to get married 2 or 3 times. All right, let's go have some fun. I'll be in the chat room. Hopefully I'll be in the chat room for most of the day, as long as the action's good. Let's go do what we do, which is the do.